What's up guys, my name is Andre, and in this video we're going to be covering the gap fill report on edgeful.com. So specifically, the ones that we're going to be covering are the standard, the by size, and the by weekday variants of this report. These are just filters. Pretty much the standard is always the most broad, and then you can filter down by gap size, by weekday, etc., etc. So in this case, we're going to be looking at YM. You can look at any ticker you want. You can also look at stocks, Forex, crypto, and futures. Now this explanation is going to be suited towards the Forex, crypto, and futures. At the end of it, I'll also give an example for stocks too. So in this case, we're looking at YM. We're looking obviously at the gap fill report. We're looking in the last 6 months. We're looking at the New York session, which is extremely important. And we're going to be covering the standard, by size, and by weekday variants of this report. So let's get started. What is a gap fill? A gap fill is when price today touches the previous session's closing price. Now, when you're looking at futures, Forex, and crypto, this session selector is going to come up. And now you can see here, I have the New York session selected, 9:30 to 4 p.m. And what that means is I'm deleting all of the data outside, all the price action outside of the session. The only price action I'm considering is within these blue boxes, which is my New York session. Now this is a custom indicator that we have built. You can get access to it as part of the edgeful plan right over here. If you click on this, you're going to see this pop-up come up, and you can put in your TradingView username right over here. And the way you find your TradingView username is right here at the top left, right over here. And you're just going to put that in. Once you do that, you go to your indicators. This invite only section will come up, and you're going to see all of the indicators appear right there. This one is called the market sessions. So if you double click on it or you go to the settings right over here, it will come out as defaulted looking like this. This will highlight all of the different sessions, the Tokyo, London, New York. And in this case, I'm going to keep my New York session on here. And what I want to do is go to my previous close. This is really important. You're not talking about the daily close, not at the 6 p.m. close. You are talking about the previous New York session close, because we have this 4 p.m. close time. So here, I want to go and I want to mark out my previous close right over here. This is the blue line. I'll actually just make it red. And then now you can see right over here that price opened above that point in this New York session. So all of this data over here is ignored. We're going from the previous close to today's open. Now, a gap fill. So this, you can see here, there's a gap up today because price opened above the previous close. If price had opened below, which would obviously be anywhere below this red line in this New York session, that would be a gap down. So a gap fill is when price comes back to touch this red line at some point in this session. It's really important that you know that if it doesn't touch in this session, but it does in this session, it doesn't matter. We only measure gaps from one day to the next. So there is a gap up here. It either fills or it doesn't today. Really important, because this is the most actionable insight that you're going to need as a scalper or a day trader. So now you can see here, there was a gap up. Price came down to touch this point. This is a wonderful target because in the last 6 months on YM, 65% of gaps up have filled and 65% of gaps down have filled. So whether price is opening above or below, this red line or the previous session's close is a great target. Now, I highly recommend looking at the weekday variant of this report here. The reason for that is typically each of the weekdays are going to behave pretty differently. So you can see here, this is pretty insane. All 12 gaps up in the last 6 months on YM have filled on Tuesdays. So specifically what this one is looking at when you look on Tuesday is it's taking Monday's closing price and checking from Tuesday's open. So in this case, you can see it actually happened here. Here's an example of this actual Tuesday. So what I'm going to do is I'm going to mark out my previous session's close. I'm going to mark out today's open. Here's a gap up. This was a small gap up here, but price did come down to touch this point at some point during this session. So that does count as a gap fill. So obviously you can see that different weekdays behave pretty differently. Even like Fridays are more 50-50 for the gaps down. Just something to consider because all the weekdays universally will behave differently. Now, next thing that I want to show you here is the by size variant. This is really important. So in this case, let's just go back here and let's plot out that previous session's close and that today's open. And I'm going to make this red again. You can see we have these size buckets. So right here you can see that we have 0 to 0.19, 0.2 to 0.39, et cetera, et cetera. So when you click on this, there is a very high probability that price is going to fill. And these are smaller gaps, obviously. So it's obviously closer, it's more likely to fill. As you go through this, you're going to see that the probabilities really drop off. Now, this isn't universal. This is just for YM that we're looking at, so I highly recommend that you look at the other tickers. But in this case, let's look at this day. And how do we measure this gap? Now, this what's in place section up here is actually going to tell you the gap size. So you're not going to have to measure it the way that I am when you are looking at this, because it'll tell you once the market opens, this is pre-market obviously, once the market opens, it will tell you the gap size, so you'll know exactly what bucket to look at. It'll also tell you whether there's a gap up or down, so you know, again, what to look at. But if you go to this measuring tool right here and you just go to the previous session's close and you go to this day's open, you can see this gap was 0.38% on this day. So that would fall into this category here. Gaps up between 0.2 and 0.39%, 75% of them have filled. So this is actually a very solid setup to be short here, targeting this area. That's the by size variant. It allows you to filter for gaps of different sizes. So again, I'll show you a different example here. This was a smaller gap, and you can see previous session's close to today's open, today's open. And you can see right here, this was a 0.2% gap. So this was definitely a smaller one. Some of them will be bigger, some of them will be smaller. You just need to understand that this is one of the bigger drivers on whether the gap is going to fill, more than the weekday, more than the standard report. Now, the last thing that I want to show you is the customization here for the gap fill. Really, really important, very powerful tool is the customization. So again, I'm going to mark out previous session's close, today's open. I'm going to make this green. Okay, so now you can see down here, I have my fill percentage set to 100. Now, what that means, and this is where number 8 right over here, this is your customization. This is how you can change any of the reports. I highly recommend playing around with these. But right over here, you can see that this is set to 100%. Now, what that means is the only way that that price will fill, that this day will count as a gap fill, is if price comes all the way down to touch this red line, or 100% of the distance to the previous close. Now you can see here that when I plot out, I'm using this measuring tool right over here on TradingView. When I plot out from the open to the previous close, this measuring tool is automatically going to give me the halfway point right over here, this horizontal line. So what I'm going to do is I'm going to mark out this horizontal line in yellow, and this is what some people call the half gap. Now, if you want to see how often does price touch this yellow line, you would come to your customization and change this to be 50%. So right over here, we're going to go to 50%. Now remember, we had 65 and 65% probabilities to fill. Now if we go to this half gap, you click, save, and you're going to see that 80%, so 82% of gaps up have touched this yellow line, and 79% of gaps down have touched this yellow line, well, the halfway point from the bottom to the top. So this is a fantastic place to take profits, take something off the table. This is a very solid level, and you can customize this to be 60% or 80% or whatever else you want. But this is a great place to see where you can start to trim some of your position. Maybe you take a little bit of profit off the table, maybe lock in a green day, whatever you want, but this is a very high probability area. Now, one of the things that I would recommend actually is if you'll notice that some of your favorite tickers, the gap doesn't tend to fill in this current market environment, I would actually recommend to experiment with a smaller gap. You don't need to go for the whole thing, but you can go for a smaller gap. And then the next piece here is that we allow you to go up to 200%, which would mean that price, so in this case it doesn't really happen too often, but which would mean, just to show you guys an example of what that is, you can see that this gap here was 160 points. If you double that, that's all the way down here to 330, that would mean that price would have to fill the gap, the size of the gap, plus another one right here. So it would be double the size of the gap. So in this case, you can see this would be the gap fill, and then you continue to be double that size. So that's what the 200%, that is the max percent that we allow. But typically you're going to want to stay at 100. You can go less, you can go more. The reason that you'd want to go more is to say, I'm really confident in this trade. There's a lot. I want to understand what is the probability that it's going to continue going down or continue going up. And here is the example for equity. So the stock gap fill is going to be right over here. So what you want to do to check a gap fill on stocks is very simple. It's just the regular trading hours close. So that 4 p.m. closing price right over here. You can see this yellow line, and I'll actually make it red. You can see this red line is going to be that previous session's close. This is right there. And then today's open is going to be right here, which is a gap up. So for stocks, you're not going to have that session piece. There's really only the previous day's close to today's open. So again, for futures, Forex, and crypto, you're going to have the sessions that you have to look at. So if we go back to YM for a second, and I'm going to turn on my session indicator. So we went over the examples with the New York session, but let's quickly go over an example right here. This was the one we used. Let's quickly go over an example with the London session. So again, I'm going to mark out my previous day's close. I'm going to make that red. I'm going to mark out my today's open right here. I'm going to make that green. Now, if you were to change this to be the London session here, and you click on that and you remove this is really the way that you have to do it. And you change, just give it a second, it's just loading right over here. So in this case, if you're looking at the London session here and you're trading YM, obviously the stats are different because you are looking at a different closing price. So if you're using a custom session, you're using one of the preset sessions, you're looking at different open and closing prices. So in this case, these two levels that I marked out were my previous New York close and my current New York open. Now, looking at London on this day, you can see that, now let me just clean this up, or I'll just make these different colors. My previous close is yellow right over here, and there was a gap down when you're looking at and I'll make this blue. So you can see the London session had a gap down that did not fill because price never got to this yellow line. And then you can see that the New York session, and I'll turn on my New York again, my New York session did fill because price came back to the previous New York close. So it's really important that you know what session you're looking at because it completely changes the data. So you have to pretend like all of the data outside of these green boxes doesn't exist. So you're only looking at the green boxes. And here's an example of a London session that did fill. You can see right here, previous session's close. There was a gap up right over here, and price came down to touch the previous session's close right over here. So just another example of the London session and of stocks. So quick recap of the actual page itself. The visual representation is here. Like obviously you can see, let me actually just change my customization to be 100%. You can see that the visual representation is right over here. The table representation is off to this side here. Then we have the streaks. So these are the last 5 gaps up. This is the last 5 gaps down. This table actually makes up every single day of the last 6 months. And then the explainer sections, this is a video you're watching. We have some explainer graphs, and over here we have the explainer text. So if you guys have any questions, please reach out down here. You can send us a message. We'll get your questions answered very quickly. I hope this was helpful. Also, if you want to look at how this report page really works, you can go right here. There's a quick video telling you how to actually navigate everything, how the bookmarks work, how everything else works. So thanks for watching.